Professor Douglas Arner. Douglas Arner is the Carey Holdings Professor in Law at the University of Hong Kong and an expert on financial regulation, particularly the intersection between law, finance, and technology. Welcome, Professor Douglas. We also have Dr. Henry Arslanian. I hope I said your name right. Henry is the PwC Global Crypto Leader and Asia FinTech Leader, Chairman of FinTech Association of Hong Kong, and an Adjunct Associate Professor at the University of Hong Kong. We have
Thanks for having me.
Thank you for joining us. We also have Jason Su. Hope I said your name right as well. Jason co-founded the Big Questions Conference to bring together leaders from all fields to engage in conversations and actions for sustainable future. Jason also co-founded TEDx Taipei and is serving as TEDx Ambassador for Asia. Welcome, Jason.
Thank you.
Okay, and last on the panel is Professor Michael Sung. Professor Sung is a technology venture builder, chairman of Carbon Blue Innovations, and co-director of Fudan Fanhai FinTech Research Center at the Fanhai International School of Finance. I hope I said that right. And your moderator today, welcome back, James Cooper. James is Associate Dean, Experiential Learning, Professor of Law, and Director of International Legal Studies at California Western School of Law in San Diego. Good morning, James. How are you doing today?
Well, thank you. Thank you, Lenny, Thelma, for the introductions, and welcome everybody. Thank you, Carl Selig and Edgardo Serafin from Digital Davos for hosting us today, and to our panel. This is, if everybody was getting paid, which they're not, this is a very expensive panel. That's all I have to say. There are a lot of expertise, particularly Henry, in terms of charging at Price Waterhouse. So welcome, one and all. First off, central bank, would you agree that last year was the year of central bank digital currencies? And why, if so, why? Jason, do you want to start?
Yeah, definitely. I think what we've seen the year 2020 was really a year of unpredictability and uncertainty, which is overshadowed by COVID-19 pandemic. And because of the pandemic and economic slowdown, and sort of pushed the central banks to rethink their economic policy, and several countries are experimenting with the idea of issuing their own central bank digital currency, CBDC. And obviously, this also has to do with the US and China trade war, and as well as the continued technology war between the two countries. And China is very fast in pushing their own version of a central bank backed digital currency, which is called DCEP. And obviously, US has been a little bit slower in catching up. We've seen Libra met with challenges in Congress, and hopefully with the new president, Joe Biden, taking office, we'll see a new light in terms of their stance on the cryptocurrency, as well as the other forms of new type of digital currency. However, I really foresee the year 2021 to become the year that the all sorts of new digital currency initiatives being recognized and used and utilized by central governments around the world. Starting with the US government with their OCC recently announced that they allow banks to take these stable coins in the US, so which I think will become the really kind of the precursor of all the other digital currency initiatives. I'll stop here, but I really see going forward the CBDC will be a huge thing for all the countries.
Thank you, Jason. How about you, Douglas?
Yeah, very much agree. I think, the key thing that we saw that really moved things forward was the announcement of Libra in 2019. And that really changed the way that central banks around the world were looking at potential alternatives. If we think of Bitcoin, we think of cryptocurrencies, we think of stablecoins. Nothing had quite emerged as a serious contender against major currencies. And the prospect of Libra really changed the view. And certainly from the standpoint of China, China had been experimenting with blockchain technology for an extended period of time. And I think that the Libra announcement pushed things forward. And as Jason says, COVID-19 really drove things everywhere. And I think what we're looking at for 2021 is moving from announcements. I think we're going to see launches throughout the year. DCEP probably won't formally launch, but the level of preparation, the level of piloting is already quite substantial. And I think that that's something that we're going to see continuing to roll out. I'm expecting that the Euro project will continue to develop. I think many of the same reasons that underlie the development of the ECNY in China are very much underlying the Euro project. And those two developments are eventually going to push the US to do something.
It's a great point, because the US, which really wasn't moving very fast on this at all, then came those July hearings in 2019 with David Marcus from Facebook, and then Mark Zuckerberg a couple months later. And then all of a sudden, everybody's running around with hair on fire. And it was a really prescient thing that Mark Zuckerberg said when he said, listen, the Chinese are doing this with the DCEP. If you don't let Facebook do it, the Chinese are somehow geopolitically going to run the show. And then you saw everybody in the US moving forward with it. Michael, how did the Chinese react to that? Did they went right into overdrive themselves to start the testing, right?
Well, yeah, I mean, you have to also remember that China had been sort of on the down low, sort of researching this since 2014, right? And actually acquiring the largest stockpile of blockchain and sort of digital currency related patents associated with it. So they've been methodically developing this for quite a while. Now, certainly it was catalyzed by the Libra, as Douglas said. You know, we have basically Mu Tanswen, who's the head of this thing, rushing back and, right after the announcement, holding emergency sort of workshops and really trying to get in front of it. And then by the end of the year, then when you have Xi Jinping announcing it. So I think certainly it was a kick in the pants, not just for China, but most of the world, right? I mean, there was uproar by central banks all around the world saying that this is their sovereignty. And it was a big wake-up call, right? Because Facebook represents such a huge ecosystem. It's more than China and India combined, and they could really disrupt the international monetary system. So that really was the catalyst, which was further pushed by, China's advanced plans. And, China is now, there's been strong, I think, sentiment that, by the time the Olympics happens in 2022, that there's going to be released. It makes a lot of sense, right? This is a good venue to be able to really deploy this and also have international participation, that kind of thing, right? So we see a lot of movements in what was originally mostly focused on retail, right? But now we see a lot of stress testing. We see a lot of more commercial, wholesale grade type activity. So I think overall there's a lot of momentum behind that, right? And now because of China, or because of Libra, and then China, BIS has done a study that 80% of central banks are actively exploring. Anecdotally, 50% of those are going beyond just sort of research papers and going to POCs and then beyond. And then I think if you look at the the landscape, there are a few areas where there's clearly some bleeding edge innovation happening, right? One, of course, is Switzerland, right? And Switzerland is already working on a digital Swiss franc, working with SDX, and trying to connect it to all the payments infrastructure in the country. But I think really the world's lead has to be Singapore, right? And Singapore has something called Project Ubin. It's actually just past phase 5. They've stress tested everything. They've created a whole infrastructure to allow digital currencies to settle with each other and issue digital securities and all sorts of stuff. And now it's been approved and handed off from the Mass Monetary Authority of Singapore to full commercialization with partners, which include JP Morgan, Temasek, which is their big sovereign, fund and entity, a commercialization entity, and then DBS Bank, which is literally world leading as a first tier bank doing a lot of digital asset stuff. So I think really there's a momentum into Singapore, which is nicely tied to what we're doing here at Digital Davos, right? Because every year World Economic Forum should be at Davos, right? But because of COVID and all the dynamics, now there's a huge shift of World Economic Forum itself to Singapore, and I think that's a sign of the times. And it kind of nicely dovetails with a lot of this other dynamic with digital currencies and things coming up. So I think this is really some catalyst for change in the world these days.
Thank you, Michael. And Henry, I imagine building on what Michael was just saying, and we'll come back to Blockchain Services Network, I hope, if there's enough time, but the One Belt, One Road initiative of President Xi, when you bring that together with what the DCEP's producing in the next year or two, with literally more than 71 countries now part of this network, an infrastructure project that is in the trillions of dollars. How do you see other countries reacting to this?
Well, yeah, I mean, first of all, I think there's two things here I would mention. One is I agree that China, when it comes to retail CBDC, right, is years ahead of everybody else. I think that's when you look at the future money is really being decided right now in China, which is, I think, very interesting. One thing that I'll mention, I don't think we should write off the US that quickly, though. I think what we've seen, if you look at the broader digital assets ecosystem, if you look at the big, large crypto players right now, the ones that are regulated, the ones that are able to scale up, again, these are a lot of them are in the US. Some of the changes that we have seen in recent months in the US, most recently, the change with the OCC with the announcement that banks can use stablecoins, and some of the other announcements that took place under the leadership of Brian Brooks, I think have been very impressive. And I think while many in the crypto community have kind of written off the US, I think we have to be careful about like writing them off that quickly. I'll give you a very good example. I mean, purely putting CBDC aside on broader crypto assets. Again, when you look at the broader center of digital assets management, again, the vast majority of the AUM and the crypto funds are still managed out of the US. So I think there's one thing I would keep in mind. However, when it comes purely to CBDCs, again, keeping in mind, obviously, the buying of fiat to Bitcoin is not allowed in mainland China as we speak. I think that for sure China is years ahead of everybody else. I mean, just the DCP or the ECNY, which is becoming the name that more and more people are using right now. I mean, just to put things in perspective for our international audience, on the phases that took place right now, there was over 2 billion kwai, 2 billion RMB. That's $300 million of actually usage, that transactions that have been done. That's over 4 million transactions. That's 12,000 use cases, and over 100,000 wallets that were made. Even last weekend, there was a lottery actually where people received 200 kwai, that's about $30 of digital money, central bank digital money that they were able to use in about 10,000 merchants in a particular area of Shenzhen. Even ATMs, they're one of the big four Chinese banks. The ATM now, they're actually experimenting with the CBDC or the ECNY. So I think there's a very interesting area happening on that front. I think, yes, and I was actually on a panel yesterday with some individuals talking about this topic. I do not, while I think it's great with One Belt, One Road, I think there's a lot of opportunities. I think the immediate short term, when we look at ECNY, this is going to happen in mainland China, not only for crypto reasons, for purely capital control reasons that already take place. So I think we have to keep that in mind as we move along. But definitely 2021, you're looking at the future of money, you have to keep an eye open on China.
All right. Well, also in the chat, please, thank you for that, Henry, in the chat. Douglas Arner, who's the Carey Holdings professor at HKU, is also a consultant with so many different international institutions and regional banks and so forth. Recently co-authored a paper with the BIS. I think the link you put in there, Douglas, is that correct? To your last paper on that.
Not that one, but I'll put in the BIS one too.
As well, which was excellent. I mean, we're talking about things that you've written on extensively and researched. Let's move to like some of the smaller projects, like the Sand Dollar, the SOV out of the Marshall Islands. Jason, you are and were the crypto congressman in the 9th Congress of the Republic of China in Taiwan. How did you try to get your country to move towards being the true crypto island?
Yeah, particularly, I think against the backdrop of the overall geopolitical tension between U.S. and China, I think Taiwan most recently has gained a very strategic place in terms of our technology leading position. TSMC, the Taiwan Semiconductor Manufacturing Corporation, has announced their opening of a new plant in the state of Arizona. And obviously with the Bitcoin mining, the ASIC chips, which is predominantly produced by TSMC, obviously I think we will see Taiwan's high-tech supply chain play a very important role in terms of in the areas of blockchain and crypto. And most recently, Taiwan's central bank has already done 2 stages of testing for CBDC, both on the retail and the wholesale side of the testing. And one of the potential use case for the a potential digital Taiwan dollars is the use on the trade finance, because Taiwan is a very much export driven economy. 75% of our economy is coming from trading from on the electronic supply chain and other types of trading. And so and our foreign reserve is world 5th largest. So we have a very strong foreign reserve, and we have a very strong US dollar savings in our central bank. What we are doing now is to provide a new type of a settling system on the digital currency issued by central bank for our trading partners to use, and which can be used to stabilize and hedge the volatility of other potential unpredictable situations in the world. And I'll give you an example. Right now, for example, our largest electronic manufacturer, Foxconn, does business with 165 countries around the world. And day in and day out, their account receivable is 180 days. And so they move a huge amount of money here and there, and also from country to country. So it's important for them to also have the ability to sort of work with a stable coin-like tool that they can use to balance their trade risks. So all of this we are seeing, I think Taiwan would play a very interesting and potentially influential role in terms of spearheading the use of CBDC. And I don't see it roll out to general public yet, but definitely in the use of the trade finance with all the Taiwan high-tech supply chain partners, we'll see a lot of exciting things going on in this area.
Thank you, Jason. Douglas, your BIS paper is so different when you read that compared to stablecoins, and really anything the BIS put out in 2020 compared to 2018. I call it 2018 is like, wow, 66%. We're navel gazing, we're thinking about it. And Michael Sung always says, you know, that the US thinks about it, or the West thinks about it, and the Chinese deploy. What projects, this is the big windup for, what projects are you seeing beyond what we've talked about so far that in terms of central bank digital currencies? And is one of them, and I say this because both Henry and I are Canadian, and I know your wife is Canadian, what about the Bank of Canada?
Yeah, I think when we look at what's happening, I think we're seeing quite a lot of projects. The ones, you know, the Canadian one, along with Sweden, Canada and Sweden are amongst the 2 most advanced. And from the standpoint of developed countries, these are going to be the models that most are looking at, because they're the sort of thing that addresses a developed country with a developed financial system, the issues there. And it's interesting to see that they're looking at sort of cash substitutes. They're looking at privacy issues. I think both are moving along quite quickly. I think the ones that I'm really interested in, and I think one of the key issues is actually around what we're going to see from the standpoint of stablecoins. And I'm thinking in the US, we're probably not going to see something like DCEP or what is likely to come out in the euro. But I think we're likely to see something, following on to what Henry was saying, something that is more of a hybrid system, where you have a sort of public-private partnership, something where you have the private sector, like an RTGS system, putting together one aspect of it, but linking directly into the central bank's balance sheet from the standpoint of liquidity support. And what that does is it basically deals with all of the problems that our existing private sector stablecoins have, without having many of the problems that come with a full public sector solution. And from that standpoint, the US could actually move pretty quickly, because many of the private sector projects, I'm thinking in particular Finality, USC, or the JP Morgan Consensus Project, these things, one doesn't take too much to run a link onto the liquidity system in the same way that you run an RTGS system. So I think we could see some things moving quite quickly.
You know, and there was a chance, a lot of people don't realize the initial March of 2020 stimulus, the PPP, the Protection Payment Protection Program, excuse me, a Paycheck Protection Program, had in its initial House and Senate bills a digital dollar like project where, because there were 17 million, an estimated 17 million unbanked households in the US, how do you get them the money fast? And these digital wallets were were in the initial bills. They got stripped out eventually. And you see sort of between Steve Mnuchin and others that are more suspect of a digital dollar, despite all of Giancarlo's great work. This leads to other near misses or projects that are starting to come to fruition. Michael, you've done some work in Bhutan. You're doing work in the region. Can you tell us a little bit about that, or at least what you're allowed to talk about?
Oh yeah, so I'm working with the UN, ESCAP, the Economic and Social Commission of Asia Pacific, on a lot of digital finance initiatives in Asia. And Bhutan is a very, I think, interesting case, right? They're what we call the least developed country, and also a landlocked one at that. So it doesn't have a lot of economic drivers, and it has very difficult geography and other types of things that it has to deal with, right? So they're coming out of this LDC status, they call it, which means that they can't get access to the concessionary loans, which is driving most of their FDI at the moment from IMF, et cetera, right? They got to grow up, okay? And they got to develop their capital markets. And right now they don't have a capital markets. I'm working with the chairman of the stock exchange. Their stock exchange, doesn't trade some of the days, right? And there's only a very limited amount of a number of stocks, right? And the bond market, the same way, they've only issued 16 bonds in the whole history of the country, right? So in that sort of, difficult environment, we need to figure out how best to develop the capital market. So I'm working with, the central bank and the Ministry of Finance and the stock exchange to explore digitizing their sovereign bonds. Now they just issued their first sovereign bonds after a couple of years of the ESCAP, UNESCAP trying to promote this concept. And their major problem is that the bonds had to be issued at 6.5%, interest rate, right? So it's a very high cost of capital, especially considering like in Europe or Japan or other places. I mean, it's negative almost, right? So people are trying to throw their money at places and they have to, pay 6.5%. And most of that is because of, default risk. But the other major factor is liquidity risk, okay? There is no liquidity, right? Basically, the bonds are being bought by a small handful of commercial banks, and they don't trade. So there's no liquidity. Now, by digitizing that, right, by taking those bonds and creating a digital issuance and using blockchain and all this kind of stuff, one, you can provide liquidity. You can get to a much global pool of investors. And now not just institutional investors, you can go all the way down to retail. One of my recommendations was to provide, retail digital bonds that, a global community of, digitally native, crypto savvy, socially conscious, environmental friendly millennials around the world can go and buy these digital bonds and use it as ways to save, including people within the country. So I think by digitizing, this is one aspect of being able to develop the capital markets. And then there's some interesting things that can happen, right? If you start digitizing the bonds, why not link it to the digital currency for settlement? And then you have a lot of other hooks that go into that region. I mean, one of the benefits that was just briefly alluded to is the fact that if you want to disseminate, for example, COVID stimulus, right? To do so with, paper checks, right, is not very efficient, and we saw that problem in the U.S., right? By having digital wallets, now we can have a much more efficient mechanism to transmit fiscal policy, and we haven't even talked about the fact that we can have programmable money, right? One of the things that Henry mentioned was this lottery experiment in Shenzhen, and also repeated in Suzhou, where basically they gave money to digital wallets, but the second part of that was if you didn't spend it within a couple of weeks, it expired, right? So that's a very interesting, novel programmable use case, but you can imagine all sorts of fine-grained programmability, which is now limited only by your imagination. And the automation of that is all through smart contracts. The cost of making arbitrarily complex rules for that go down to zero. And now you can direct stimulus in a very fine-grained manner, and that kind of fiscal policy tool for a central bank could be very, very compelling.
And a lot of people probably know Bhutan is a disruptor, just given their gross domestic happiness index, that they have a different set of economic indicators, and it seems like a really great place to do this kind of work. Thelma, are we okay for one more question, or?
Sure, take your time. We're waiting on a few more panelists for the next panel, so you're all good.
Terrific, thank you.
Jamie, just because you mentioned that, I might just take 30 more seconds and say that the other project I'm doing with Bhutan is exactly that, which is they have a gross national happiness framework, a nice quantitative way of measuring happiness, and they're driving policy that way. And what I was actually at a lunch with the central banker at a UN conference in Bangladesh the year before, and we had kind of come up with the concept of digitizing happiness, i.e. creating a commodity out of happiness measured by their gross national happiness index methodology. But what that does is you create economic drivers, okay, to be able to incentivize people for, what I'm calling incentivized benevolence, where you take private interest, i.e. economic interest, and you align it to public good, i.e. doing things that would make people happy or society more happy. And you can create an economic system the same way that you would use it for carbon credits, let's say, which is the same thing for pollution, which is one dimension of happiness. So anyway, there's some very interesting innovation that can happen in digital finance, in packaging anything of value. And I think there's nobody here that would claim that happiness doesn't have value. It might be kind of nebulous, but it certainly has value. And now we can package it into a commodity that can be tradable. So that's very exciting.
Commodifying happiness. Thelma, if we can, I was going to go around the panel once more and just ask: is the currency movement a revenge of the state? If you could try and limit your answer to a minute or less, please, that would be great. Douglas, do you want to start?
The short answer is yes.
Revenge of the state. How about revenge of those international organizations which you consult for?
For them, I think it's, as Michael is saying, it ties very nicely into their mandates. Digital is a real tool for achieving lots of wider objectives. And I think when we're talking BIS, IMF, World Bank, that's really what they're focused on. And as Michael said, certainly one of my big projects is looking at the intersection between digital finance and the SDGs. And some of these are just incredibly powerful tools.
Okay. How about you, Jason? Is this the revenge of the state, the sovereign state?
Well, I think one of the most critical issues is obviously the financial inclusion, right? And I think what digital currency or CBDC has been sort of promising for a lot of countries is that it allows, I think, those unbanked to be able to have access to finance, which is, I think, it's the ultimate empowering goal of the having peer-to-peer payment system that I think is what Bitcoin was originally created. And I think we are, as the entire system is concerned, I think we are moving towards from pre-liberal to mainstream. And that's where the regulations really needed. And I'm a firm believer in that if this industry were to really have a long-term development, I think the regulations must be in place. So I'm just in general very happy to see central banks start paying attention to this space, and I think regulators around the world start doing things to regulate this industry. And I do think that this is not like when internet was just started 30 or 40 years ago, but I think this has to do with a sort of revamping or revolutionize the way how our society works, and which is basically the empowering of the authority, and also having the access to money, and being able to transact it anywhere and anytime, and with easy access.
Thank you. Thank you. Henry, how about you? Revenge of the State?
Oh yeah, in an indirect way, I think the fact is all this stuff about CBDC. I think what I'm watching in 2021, a part of many elements that were discussed today, from stable coins to more activity, is financial institutions. I think in the past, many traditional financial institutions didn't come in because there was lack of regulatory clarity in others. And now with CBDCs driving kind of ahead of the pack, I think we should see other financial institutions, the big banks. So definitely an area to watch. The second thing, by the way, but counterintuitive, I'm actually following tax developments, crypto tax, which is very important. We need, as much as we need regulatory clarity, we need tax clarity. And the more tax clarity we're getting, and PwC will publish a ranking every year of tax authorities in crypto, I think you're going to have this whole CBDC and broader digital asset space kind of solidify, and that makes it more mainstream, and that makes it super, super exciting. So I'm looking forward to sharing again in 2022 at Davos, hopefully in person again, when we're all together in the beautiful cold with our boots.
From your mouth to God's ears. Michael, last comments about Revenge of the State and how these decentralized technologies are being used by centralized governments.
Well, I mean, the fact of the matter is, look, we had central banks control the international monetary system since the beginning of time, right? They're not going to take it standing down and have the private sector just kind of roll in and have this decentralized world. So yes, I do believe that I wouldn't frame it as revenge of the states, but more just the fact that there's going to be a multipolar world where the central banks will have their role, and rightly so, and their sovereignty over the nations and the monetary systems and ability to enact fiscal policy, I think is very, very important because we still have things called countries and states that need to be managed with their monetary system. So that will exist. What I think is nice though, okay, is because they have now tacitly accepted central bank digital currencies as a thing, that means that there's much more tolerance for the private sector stablecoins and associated digital assets in a nicely regulated way, of course, that will also be part of the ecosystem. So I think overall, this moves the needle to I think, a much more optimized state where there's going to be a plurality of different options for people to choose from, and I think that will benefit financial inclusion and move the needle in terms of optimizing for society in the future.
Great. Thank you, Michael. I'll turn it over to Thelma. But first, let me say thank you to Professor Douglas Arner from Hong Kong University, from Fudan and Fanhai FinTech Study Center, Professor Dr. Michael Sung, the Honorable Jason Shu, former member of Congress from Taiwan and current fellow at Oxford University, and Henry Arslanian, all-around guy and everywhere at all times, watches podcasts, Crypto Capsules on LinkedIn, voted one of the top 25 leaders in the area. Thank you all. This was a great honor to see you all again, and we'll see you in person, as they say, next year, not in Jerusalem, but in Davos.
Thank you.
All right.